TD Securities today telling clients to take profits in gold. Dan Ghali is behind the call. He's the firm's senior commodity strategist. Dan, great to have you with us. Why give up on this move higher?
Yeah, listen, thanks for having me on. Listen, over the last few weeks, a few things that you've been discussing have been absolutely correct, right? First part is that investors have been historically underpositioned in gold into a Fed cutting cycle. But when you fast forward to today, a few of those things have changed, right? Firstly, macro traders, and those I'm calling that the traders who care about things like macroeconomic expectations, the number of Fed cuts priced for 2024, their positioning is now a lot more consistent with rates market pricing. The rest of the community, mainly algo trend followers and Chinese buyers, have also bought an extreme amount of gold over the last week alone. So from here, I think the easy part is over. The risk reward to higher gold prices is now dependent on macro trends deteriorating.
So thank you for the comments. If next week we've got CPI and PPI, obviously they're going to be important as we think about what the Fed's going to do, timing, size and speed of rate cuts. Obviously important for gold as we think about the opportunity cost of owning gold. If you got lower than expected CPI, would that affect your view, or is your view beyond that one print?
No, absolutely. Look, we're forecasting gold price of $22.50 for the quarter. So I wouldn't say necessarily that we have a bear call. I would rather say that the easy part is probably over here. If we do get lower inflation and continued evidence of disinflation, then that would support more Fed cuts for 2024. And in turn, macro traders, that's really the last community that you need to start to buy gold. And that would certainly help that.
Hey, Dan, Tim, thanks for joining us. Talk to us about correlations between the various PGMs. I know you're bullish on platinum and palladium. I think silver has underperformed gold if you look at least historical ratios between the two. So, again, there are trades that are based upon industrial use. There are trades that are based upon macro, and there are just long-term relationships between these. Talk about any part of that.
Sure. So listen, the most exciting part of what you said is silver, really, right? So the PGMs are trading exceptionally weak against gold. That relates actually to a trend of destocking. And it's funny because over the last year, we actually had exceptionally strong fundamental information come in PGMs, and they just traded far lower as a result of speculative selling activity and physical destocking. The piece I think that is most interesting for the next year or two is in silver market. And I mentioned that because there's a few assumptions that we all have about these precious metals markets that might be challenged. And one of them is that we have enough silver available above ground to satisfy the tremendous demand growth coming from solar cells. I think that's going to come under challenge over the next year.